Welcome to Tradewinx software. Get started trading options. An option is the right to buy or sell an asset at a certain price at any time before a certain date, but not an obligation to do so. Let's say that you want to buy a house, but you won't have the cash to buy it for another month. The owner agrees to give you the option to buy the house in a month for $200,000, but only if you pay $2,000 now for that option. 1 month later you may discover that a famous celebrity is moving in next door. You can now buy that house for $200,000 and sell it for a profit. Or perhaps it turns out that all the pipes have now burst in the house and it's worth a lot less, so you decide not to buy it, letting your purchase option expire and lose your $2,000 investment for the option. That's the basic process for trading options, though in practice it is very complex and extremely risky. If you're interested in this higher-risk investment, make sure you take the time to educate yourself and only invest with risk capital. 1. Know what options are. Options are contracts that confer to their holder the right to buy or sell an underlying security at a set price, the strike price, within a set time period, the term. The strike price may be lower or higher than the current price of the underlying security, the market price. An option, just like a stock or bond, is a security. Options are traded on an exchange in the U.S. or purchased, sold to a foreign broker. While an option allows one to leverage their cash, an option controls a greater value of stock. It is high risk because it eventually expires. 2. Understand the risks of options trading. Options can be purchased speculatively or as a hedge against losses. Speculative purchases allow traders to make a large amount of money, but only if they can correctly predict the magnitude, timing, and direction of the underlying security's price movement. This also opens up these traders to large losses and high trade commissions. This makes trading options risky, especially for novice traders. However, options can also be used as a strategy for protecting your investments. For example, you could purchase a put option to sell your shares of a stock if you are worried that the price might drop suddenly. This method of using options is somewhat safe, as you only stand to lose the contract price. 3. Learn to talk the talk. Look up options trading terminology, organize the terms in a spreadsheet, print them out and start studying. Here are some very basic terms. A holder is someone who has bought an option. A writer is someone who has sold an option. A strike price is the price at which the asset will be bought or sold, depending on whether it's a call or a put. This is the price a stock price must go above, for calls, or go below, for puts, before an option can turn a profit. In the money is a phrase used to indicate that the market price of the asset is higher than the strike price, if it's a call, or lower than the strike price, if it's a put. Out of the money is a phrase used to indicate that the market price of the asset is lower than the strike price, if it's a call, or higher than the strike price, if it's a put. Give us a call +9183910944408. Register now www.stockbuysellsignal.com.